Welcome back. Futures are rallying this morning. Take a look at this big rally underway for stocks. The Dow Industrial's up 580 points right now, better than 1%. The S&P and the Nasdaq are further into record territory, with the S&P up 73, 1%, and the Nasdaq up 471. That's 1 2/3% uncharted territory. After President Trump temporarily paused his Project Freedom in the Strait of Hormuz and said that the U.S. is moving closer to an agreement with Iran. Apparently, there is a memo of understanding underway right now between the two countries. That is why oil prices are plummeting this morning. Take a look at the price of oil. Down 11.5% right now on crude oil at $90.42 a barrel. It just a few minutes ago broke $90. All of this after a very strong earnings season. I just spoke with White House Economic Council Director Kevin Hassett moments ago, and he is predicting 4% growth later on in the year. Watch this.
I'm highly confident that we're going to be looking at 4% numbers for the rest of the year. And the way to think about it is we just got a 2% number out of the latest GDP release, but it was all capital spending, and a lot of that was capital spending imports. And so with productivity growth from AI growing at 2.5%, 3%, with capital deepening growing 1.5%, labor supply being solid at above that, but not as big as it's ever been, it's easy to see that growth is going to be in the fours for the rest of the year.
Joining me now is the CEO of KBW, Tom Michaud. Tom, great to see you. Thank you so much for being here.
Great to be with you, Maria.
Yeah, and you know, your focus at KBW is always the banks, but I want to get your take on what you just heard there from the broader economy. How do things feel to you?
Well, we focus on financial services as well, in addition to banks. So our view is that there's been an incredible change in the economy and in the industry with this administration. We believe with the focus on innovation, growth, and leveling the playing field across financial services, it's a very positive development. And I pretty much view financial services right now as a giant collision. It's a collision of new entrants. There are new charters coming into the banking industry. There's a lot happening on the AI and technology front. I think a lot of it's very exciting, and I think a lot of it is for the reason why there's so much energy in this economy because of this innovation.
Well, that's what I want to ask you, because we just had this whole discussion about stable coins, and you know, there's no one better at financial services than KBW, and you've been at this a long time, so that's why I'm really trying to tap into your expertise there. But it seems to me that it's worth noting that right now, not only do we have this incredible moment in time of innovation with AI, you know, changing everybody's lives and their businesses, but that is combined with an administration that's willing to take the shot, willing to take the risk. And when you have those two things colliding, that is incredible in terms of growth.
I think that's what's happening, because I think if you look at where things were, the banks were always the bad guys. After the global financial crisis, more capital, more regulation, I call it perimeter regulation and enforcement, keep shrinking the perimeter. They were chased out of making mortgages, which is why many of them were founded. So I think what you're doing now is still, it's safe. By the way, it has to be safe innovation. It has to be safe regulation. I don't think anybody wants a crisis. I don't think anyone wants things to come unglued, and I don't think they will. But I think what you need is a level playing field where all participants play by the same safe rules.
Yeah.
And I think that's where we're headed. So if you start giving some of these fintechs bank charters, they better be ready to play by the same rules as the banks. And I think that is logical and puts the country in a better position for growth, both growth internally and relative to the rest of the world.
Well, you're spot on, because that's the criticism, right? Okay, so the fintech companies and the crypto platforms want to be able to pay yield, and at the same time they don't have the same regulations.
I have to tell you, I mean,
one of the major banks have. They're not FDIC insured.
Correct, and one of the reasons why I think we have the leading financial system in the world is because we have over 100 years of rules. By the way, regulation isn't all bad. Too much regulation is bad. But you need to have rules where everybody knows it's fair and it's safe. And the capital markets in the United States have that. Just because we have innovation and you can do it differently doesn't mean that you should abandon all the rules. It just means all this innovation should play by the same rules.
Exactly.
And when you listen to what the Fed is saying and you listen to what's being talked about right now in this Clarity Act, I think the idea is to maintain maintain a rules base, but also allow innovation. And that's what hadn't been happening before. But I know we're not arguing for, I wouldn't argue for not having all these rules. And we're going to be headed towards a lot, whether it's stablecoin. Also, the banking industry is going to respond with digitized, tokenized deposits, which will look a lot like a stablecoin. The key is it's serving the customer with what they want and what they need, and not building something that's just cool. It actually has to have a use case, and the banks are very good at that.
I think that's such a great point that you make. And by the way, let's not forget that we're coming off of a period where the banks were strangled. So,
correct.
I mean, you know, we're talking about Mickey Bowman changing the rules at the Federal Reserve with regard to capital, because where it was under Michael Barr and under Joe Biden was just a very different place. So there's that to consider.
We're going to have a lot to talk about tomorrow about this, because, you know, Citigroup is having an investor day downtown here in Manhattan. I expect it to be blowout attendance, and they're going to talk about the transformation that's happening at Citigroup. We've been recommending the stock. We do think that bank stocks, especially today, are poised to do well. We've got bond yields down, we've got oil down, and so it looks like we're headed towards resolution with the Middle East situation. That's very bullish for the banks, and Citigroup has been one of the stocks we've been recommending. And tomorrow they're going to talk about what all this re-regulation in terms of resetting. I hate to say deregulation, because it's not like there are no rules.
No,
we're actually
you're
just
coming off of a very strict period
of the excess rules. We're going back to what was originally attended.
Normalized.
Frankly, we're normal. Thank you. That's a great word. So they're normalizing the regulation. You're going to see that in play tomorrow. There are going to be dozens and dozens of Wall Street research analysts talking about this tomorrow. And I think it's going to be quite bullish. We like the stocks.
This is one of your favorite names, Citi. And what are your other favorites? And
so
I want to know if it's partly because of capital markets and what you're expecting later in the year. Let's not forget, if we see this market, this firmness continue, you're talking about some huge IPOs that will happen. You've got SpaceX, you've got OpenAI, you've got Anthropic, all expecting to come to market. What does that do to the banking sector later on in the year?
And I'll also tell you, by the way, it's happening in the U.S. as well. The rest of the world hasn't really rolled into this. So that's why I do think the U.S. markets are going to keep leading the world. But it's very bullish. There's a profitability improvement story happening. And our three favorite stocks have been Citigroup, KeyCorp, and Citizens Financial Group amongst the larger caps. These are the ones where we think that there are very good profitability improvement stories. The stocks still trade around 10 times earnings, which is not expensive relative to the market, and they still have very strong earnings per share growth. Plus, both of those, while they're not Main Street investment banks like a Goldman or a Morgan Stanley, they do have investment banking operations that will participate in what you just described.
Do you think that we will see a big move in capital markets as a result? Do you think those deals come to market?
I do think so. I think as long as we don't get something, you know, coming out of what's expected in the Middle East, I think the markets do hang together, because I think really what everybody's talking about is how strong this first quarter was in banking, in financial services, everywhere.
Yeah. And what about credit quality? What do you want to say?
So credit quality was a real surprise in the first quarter. It's been excellent, and it remained excellent, and there were no blips in the quarter, even private credit. Okay. So now, but we do think it's inevitable it will normalize, because we don't want the market to think that this is the new normal. It's been so excellent, it wouldn't be surprising to see credit go up. If oil did remain at $100 for the rest of the year, let's say, which it's $90 now, so that's not happening. But if it did, then that would be bad for the consumer, and I don't think anyone wants to think otherwise. Yeah. So we're watching it carefully. So we have in our earnings models higher credit costs, but we don't expect a crisis. We expect movement towards normalization, and we're seeing double-digit earnings per share growth even with that.
Wow, what a backdrop. Tom, this is great. You really walked us through it. We so appreciate it. The Citigroup meeting tomorrow is just on Citi?
It's just on Citi.
Okay, so they're doing like an investor
Jane and her
show.
team. It's a one-day on-site investor day.
Okay, we'll watch that.
They're going to roll. And then there's a regional bank next week having a similar one in New York, Western Alliance.
All right.
Which is a company that's been in the news. So I would say Citigroup's one of the world's largest corporations and banks. Yeah. That's this week. Next week, we're going to have a near $100 billion regional bank talk about their outlook in New York, Western Alliance. And it's bullish that these banks are getting more eager to meet meet with investors
Sure.
to talk about what their plans are.
We'll watch those stocks. Tom, great to have you this morning. Thank you.
Great to be with you, Maria.
All right,
Thank
Tom
you.
Michaud from KBW. President Trump just posted on Truth Social moments ago, and he writes this: assuming Iran agrees to give what has been agreed to, which is perhaps a big assumption, the already legendary epic fury will be at an end, and the highly effective blockade will allow the Hormuz Strait to be open to all, including Iran. If they don't agree, the bombing starts, and it will be sadly at a much higher level and intensity than it was before. The president just writes that. Keeping his options open. We'll be right back. Stay with us.